Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Now, you can have earnings as an individual company on any day of the year. Okay, so your company that you're trading might have earnings in November or December or whatever day they choose to, but most companies have January, April, July, and October. Now, why do you think that is? Anyone want to take a guess at that? These are public companies with public records, and it's their fiscal year, their quarter. Yeah. So at the end of the March quarter, they have to report their public earnings to the public investors, and let them know. So that's why it is the earnings season during those months. And the entire market, can have their own individual cycle, their accounting cycle, but most of them do it during that time. Here we are. And by the way, different sectors come out at different points. You'll notice the brighter the pink, the closer we are to earnings. And Matt, specifically the financial sector. If you'll look at the financial sector right there, just put your mouse over financials and the big banks. Read the dates right there, Matt, out loud, just on the biggest.
JP Morgan January 12th, Wells Fargo 12th, Bank of America the 17th, Citibank the 16th. Those are your big ones.
The big ones are coming out either this Friday or next week. So the financial sector tends to report earnings first, and I really believe that it sets the tone for the entire year. Historically, the biggest company to report first is Alcoa, and Alcoa is a great one to track and follow. But as a sector and an industry, financials tend to go first. Then you get the GEs, the healthcares. Technology is going to be later in the month, but you have to look this up. Now, there's another setting in here, Matt, I really like called earnings date performance. And I want you to click on that as well. Now, this, as we go through the month, it's not going to be very clear right now because we don't have an earnings. But as you start to see the earnings come out, what you're going to see, and I want you to type in efficient market theory, okay? Efficient market theory. Matt, if a stock goes up 10% on earnings, what does that mean the market thinks of it?
Market loved it, regardless of what you think about it.
Don't overthink this, okay? If a stock drops 20% on earnings, what did the market think?
Market hated it. And I want you guys to think about something for a second. So many times I see individual investors look at the number that comes out, okay? And let's say XYZ company is expecting 5 on the earnings per share and $2 billion on revenue. We'll just say that number. That is put out by analysts, right? And then the number comes out and it's 5.5 on the earnings per share and $2.2 billion on the net revenue. So they beat the analyst expectation, correct?
Mm-hmm.
Would that typically be positive for that? That would typically be positive for it. And I can't tell you how many times in my life somebody has told me, right, that, well, Matt, they beat the expectation and they beat this and it still went down. That is such nonsense. It still went down. And it's like, okay, hold on. Let's back up the horse a little bit. First and foremost, those numbers are put out by analysts and they're basically arbitrary made up numbers. That's number one. Number two, Apple, the way GAAP earnings are reported is kind of how they cheat. And now we're all starting to understand how they're cheating earnings. And so, like, for example, Apple, to give you an example, Majin, Apple is historically, they will basically set the bar really low and then they always outperform it. And over time, do investors kind of, understand that Apple is doing this or that other companies is setting the bar low so that they can arbitrarily beat the number. And so at times, the market will still sell even if they beat the analyst expectation because they expected something a lot bigger than that. And the reality, guys, is it's not like millions and millions and millions of people around the world analyzing this number and analyzing the analyst number in comparison to what actually transpired on the earnings report. A lot of it is typically 1 or 2 or 3 big time institutions who see this and expected a lot more, and they said, hey, listen, we expected more growth in this, and because we expected more growth in this, we're just going to close our position right now. Does that make sense, guys?
Yep, sure does. And guys, these simple tools will help you a lot. And Matt, go ahead and finish that thought. Sorry to cut you off.
I was going to say, that's why when it comes to the efficient market theory, the only thing that matters, guys, is not what the analysts say. It's not what the actual earnings report stated. The only thing that matters is what?
Scoreboard.
How the market responded to the information. It's scoreboard. Point at the scoreboard. That's the only thing that matters.
Kind of like in the gym today when I beat Matt at a free throw contest. Scoreboard, right? Everybody say scoreboard in the
Oh,
chat.
he just had to say that because I posted on Facebook that I beat him 21-2 at racquetball. He did. He beat me 5-2 in our shooting game. You got to give credit where credit's due, and he played well and I did not.
It's all good fun. You got to keep scoring life.